Ladies and gentlemen, Greg McCloskey from ForexLive.com. This is a Forex Quick Look. Going to take a look at the dollar versus Canada. Today's date is January 29, 2024. Let's get started. Before we take a look at the price action today, let's look at the price action that we saw last week. I want to point out this level right here, this level at the 134.14 level. What's so important about that level? Well, if you go back in time, you take a look at this high right here, where the stall right near that level. We tried to stall against the level here before breaking to the upside, testing the 200 bar moving average on the 4-hour chart here, moving back below the level. We came up to the level and tested it again here, moved to the downside, came up to the level, traded above and below it with the 200 bar moving average holding resistance initially before breaking to the upside, and then using that 200 bar moving average as support and the move to the downside. We moved back to this level in trading last week on Monday to be exact, and the market bounced off of that level, ultimately moving to the high price for the week, and then moved down and retested that level on Friday once again. So the 134.14 level, folks, is one of those levels that is sticking out in my mind, sticking out on the chart, and I'm sure that other traders out there are seeing the same thing. So as we head into the new trading week, into this currency pair, what we do know is that that level at 134.14 is going to be a level of interest by market traders. Now, what about this blue line right here? This blue line represents a 100 bar moving average on the 4-hour chart. And in trading on Friday and again today, the price has gone above and below the level. So the market's not necessarily paying attention to it. Nevertheless, we are moving back down toward it. If we were to move below that level, I would still think that the bias would be more to the downside or increase to the downside with the 134.14 level as the next key target. Now, if we do get below the 134.14, there's other levels down below that level that are of interest. One is a 38.2% retracement. That's how the move up from this low right here. That's a December low to this January high. That level comes in at 134.01. Below that level is the low of this swing area, and you have to go all the way back to this mid-December right here, where we started to develop this level as a level, or this whole yellow area as a area of support / resistance, and you can see the number of different times that the market did find either support buyers or sellers against that level. So that goes down to 133.98, and then we have the 200 bar moving average on the 4-hour chart, which again held held support right here against that level. So that's going to be a key level on the downside if the selling continues for this pair. Now, if we do hold the 100 bar moving average here and we start to rotate back to the upside, on Friday's trade, we did come up to these moving averages, and more specifically the 200-hour moving average. That's a green line in this chart, and did find willing sellers against that level. We also, at the same time, was testing the 200-day moving average. So you can understand the reasons why the market did find resistance against that 200-day, 200-hour moving average right there, and the market rotated to the downside. So, I guess if I were to characterize a wide level for this currency pair, it would probably be the 200-day moving average up here for obvious reasons, and on the downside, it'd probably be this 134.14 level. To get below that level. In between, we have the 100, 200-hour moving average, a 100 bar moving average on the 4-hour chart, sundry other different lows that have occurred through this area right through here. But those are the key levels to watch, to pay attention to lean against, to use as levels to initiate new positions on a break. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.